Righto, welcome to the blog for Friday the 3rd of August 2012. This is day 40 of 65 of the compound effect. Just finished the 8th week out of the 13-week challenge of making forward progress every day, every week, and applying my edge method and making sure I'm just working on the little things, progressing, applying my edge, sticking to the method day in, day out, and be doing the same thing and moving ahead at the end of that 13 weeks. Righto, so the system, just something of, as far as the time frame for the system I've added in, is just really chosen to do 4.5 days a week now, so Monday to Thursday, and then come lunchtime Friday, shut it down. Just find Friday afternoons are just at the moment very quiet, and in general they tend to be an afternoon that can be a little bit less predictable. So what I want to do is just take everything that I've learned and apply it to decent markets, and I just think of the week, Friday afternoon can be sometimes a little bit off, or a little bit different to what can be considered standard. Not always, but it's just something I've decided to apply. So just a 4.5 day week, and keeping the at the moment the 3 different strategies. So a continuing trend, basing that on my continuation trade and my momentum trade, just looking for the market to continue, really trying to bring in some black and white rules and involve some moving averages, so especially the moving average 20. So rather than me trying to decide which direction the market's going, just leaving it all up to the moving average, and that way it can be a little bit more systematic in that approach. And even if occasionally there's a trade that maybe sets up a little bit differently to how I take it, the main thing is that it's systematic. Strategy 2 is the same sort of thing, breaking the high and low, so continuation of the trend. But again, just when it's approaching the highs and lows, obviously that's the particular direction it's heading, so there's no need for the moving average, but just need that immediate price action as far as where I want to take the trade from. And then strategy 3 is the reversal, the pivot strategy, looking for the market to head in one direction, all of a sudden change and start applying some pressure to a pivot, and that's where I look at take the reversal or the directional trade. So today, quite significant, we pushed up and broke up into these areas again where we haven't been for quite a few months, since the beginning of May. So definitely these markets on the upside. It was quite, bringing out the 15-minute charts here, quite unexpected. Saw these markets starting to move up, expected them to get some sort of resistance. Really did think 68 would be level that would hold them down. You can see it's the bottom of this range. It's an area we've popped up to before. So the buyers certainly came in and showed that they want to take back control of this market, and by the time the market was opening as well and trying on the upside. So I believe the markets again could go both ways. There's some more resistance down at this level here, basically where we opened up, but was a little bit more swayed to the upside just because this momentum was certainly going up, and just stick with momentum wherever possible. Righto, so 2 trading setups, one that I got an entry for, a fill for, and another one where there was no fill. So here I've just drawn, this is the directional breakout trade, just to make it a little bit more clearer for myself, just drawing what I call an order block or a breakout block. So this block won't be present every day of the week. I'm looking for it to be there 2, 3, or even 4 days. I'd say overall half the days. I'm looking for this order block to be present. That's where the market comes up, and ideally it's easy to see if the market's just dealing sideways, and you can just all of a sudden draw this bit of a channel, which it's coming to the opening of the market from, and looking to break out of that channel. Sometimes in this particular case, the market's coming up quite a rapid rate here, but even at the top of this area here, I could still see a bit of a channel where the market tried to come down. It's just there's still an order block here present. It won't always be there, but this particular one that was there, and this is it down here. So a low and a high point, and then just what I'm looking for is market open up and just really shows a push outside of the block, and then come back, use the block as support or resistance, and then continue on with the trend. So you can see this particular case, first of all, it's popped up, certainly very early there, started popping down here, watching other markets. Of course, other markets are a major indicator here, so if this is pushing down like this, I want to see all the other markets show strength through the order block, then use the bottom of the order block as a resistance to sell from. That didn't happen. From there, everything turned to the upside. Actually, this area here, it was very going to be not one to take anyone even had it pushed out, because half the markets were pushing down, half the markets were really waiting. And it was the Nasdaq and Russell, a few of those that really which were trying to push down, but then all of a sudden all the markets started pointing to the upside, and seeing something like the Russell and Nasdaq, they just completely turned around from the downside to the upside and all charging ahead. So that was great signs, and all of a sudden this market pushed, so it needs to be 4 ticks at least outside the order block to be considered at breaking it, and then pop back and use the top as a support level from there, and then away it goes. So like I said, this is a trade, I said previously, I want to use as one to look for greater expectancy on, so bigger average wins. And you can see, quite often the first trend of the day is one, if you're going to do that, to certainly have a look at something like that, taking some contracts out at different levels, but just letting some of them ride. In this particular case, I've just stuck with how I normally do it, and that's just taken 11 ticks out of this one. But certainly one that I wanted to look at getting 5-6 points from, which would have eventuated, but that's something I'm going to look at over time anyway. So just a normal winner there. And then a breakout trade up around here where the market pushed up higher. You can see up around here, this is where the market's pulling back, and then looking like I want to head back to the highs. So this is the price action level for this specific area that I've identified. The market's hovering around it, then all of a sudden we've got this real push through it, so looking for it right here to come back, use this as a support level and then continue through, but in this case it just never came back and got a fill. And then lunchtime, that's pretty much it for the day. So just the one winner for the day, and overall the week, keeping in line with what we've been talking about with far risk models, and pulling out contracts at 1R or whatever I'm prepared to risk, taking some contracts out there, so I'm risking 5 ticks each trade. What happens if I pull out some of my contracts at the positive 5 ticks? Obviously today with just the one winner, by taking contracts out, wouldn't have been as good a result as just leaving all the contracts in there. So as is, it was 11 tick trade, pulling out half my contracts, it would have been an 8 tick winner on average. If I had to pull out a third of my contracts, it would have been a 9 tick winner on average. So then the overall week, now that I've completed the week, it was as is plus 32 ticks, pulling out half the contracts plus 32.5 ticks, pulling out a third of the contracts at 5 ticks plus 34 ticks. So you can see, across a couple of different ways of doing it there, there's just a variance of a couple of ticks. So that changed quite a bit through the week. I started off with a lot of couple of losers and a lot of break-even trades. So obviously that pulling out the contracts earlier would something that'd be really beneficial. But then towards the end of the week, had quite a few winners, and as a result, by pulling out those contracts, start to get less of an impact. But that's something really to weigh up. I'm still definitely looking at it, and of course I think the way you got to see it is pulling out your contracts early. Yes, that's going to increase your strike rate, because there's going to be times then where the market only goes 5-6 ticks, and you're pulling out some of your contracts, and especially if you're starting to reduce your stop a little bit, even if the market comes back and stops you out, that's going to be almost, you're probably going to get almost 1 or 2 tick winners. So your strike rate's going to increase, but your expectancy will drop, because your overall average winner will be small. I know when I risk 5 ticks and go for 10 ticks, every time I go into the market, that means I stand with a 2-to-1 profit level, meaning my profits are twice as big as my losses. But if I go in and take out half my contracts at 5 ticks and let all my and the rest go to 10 ticks, well, that means if overall I'm gaining on average 7.5 to 8 ticks to a 5 tick risk. So there automatically my expectancy drops from 2-to-1 to about 1.5 to 1, but my strike rates increase dramatically going up. So it's definitely a balance between the two and working out what's best. I think from a psychological point of view, expectancy aside for a second, Obviously, if you're taking out some of your contracts at 5 tick, you're at least pulling back some profit every time. It's a lot easier. You can see that closer profit tick target at 5 ticks, and psychologically that would be helpful. But then, and it's probably a good way to start. It's probably something it's worth starting with. But then really keeping an eye on it and finding out for yourself whether it really is worthwhile, or if there is a better level you can start to pull your contracts out. And by recording all this information, you should know, as an individual, exactly where you want to base your trades and pull out your contracts. So that's the week done, and we'll speak back next week.